Hey everyone, welcome to another episode of Ad Mail. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, welcome to another episode of Ad Mail. I'm Adam Bergman, tax attorney and founder of IRA Financial. And on today's podcast, of course, as usual, three wonderful questions from three super smart individuals. The questions will cover eligibility for a solo 401k, business versus a passive activity, using an IRA to invest in a corporation, what are some of those rules, and then using the ROBS structure to buy a trucking business. How are some of those funds, how may they be used in the business? So all in all, I think it's going to be a really fun episode today. So buckle up, and without further ado, let's get rolling. First question is from YouTube, and this individual wants to know, I have a rental real estate business, but it's passive. Can I set up a solo 401k plan? So this is a wonderful business because it's a wonderful question for a topic of whether an activity is a business or a passive activity. So real estate could be both, right? We know lots of folks that have a full-time real estate business, whether they're a developer, a lender, agent. This is their business. They either have an LLC, a single member LLC, sole proprietor, they follow Schedule C, or they have a C or S Corp, they give themselves a W-2. It's a business. And there's millions of other Americans that just passively invest in real estate through a Schedule E. They don't pay Social Security and FICA. It's not a business, but they're in real estate, right? They own a couple of rental properties, Airbnb maybe, whatever the case may be. They got a full-time job. This is on the side. They don't want it to be treated as a business because they don't want to pay the Social Security and self-employment tax. They're happy it's treated as a Schedule E passive real estate rental enterprise. But if your activity is deemed passive and not active, the net income generated from that activity is not eligible to be contributed to a solo 401k plan or any retirement plan for that matter, including an IRA. So that's the downside of having your activity categorized as passive, is the income is not eligible to be contributed to a retirement plan. The upside is you don't pay the Social Security and FICA tax, which 12 to 15% is a win, although you don't get that contribution deduction into the plan. So that's essentially your determination based off the facts and circumstances of your situation, which based off your question, unfortunately, I can't answer. So it's really, are you treating your rental real estate activity as a business or not? Now, you may say it's passive, but you may still be filing a Schedule C, paying the Social Security and self-employment tax, which is cool. That means the net income, the net Schedule C amount is eligible to be contributed to a solo 401k plan up to the 415 limit for 2023 of $66,000, $73,500 if you're over 50. If you make employee deferrals to your full-time employer plan, if you have access to a 401k at work, then that will be reduced by the amount of the employee deferral. But in sum, the answer is yes. You potentially could set up a solo K for that rental real estate, but it needs to be a Schedule C business, or you need to take a W-2 from your C or S Corp. And if it's a Schedule E, you'd have to move it from E to C, but that would then trigger self-employment and FICA tax on the net income from that activity. So without getting more facts, that's kind of the best I can do, sorry. But a really good question, nevertheless. Second question is also from YouTube, and this individual wants to know, I'm looking to have my IRA own 100% of a corporation, and the corporation will operate a business. Will that cause a prohibited transaction? So again, I'm going to just kind of dance around some of these facts because I just don't know. But again, I'm assuming it's a C Corp, not an S Corp, because an IRA can own an S Corp. I'm also assuming because your IRA will own more than 50%, you're not going to be actively involved. You're not going to take a salary. You're just going to be a passive owner. Basically have someone operate the business. If that's the case, you can do it. So let's say my IRA own 100% of a restaurant. right, of a corp that owns a restaurant. I don't know anything about cooking. I'm horrible in the kitchen. You don't want to taste anything I make, but I always want to own a restaurant. So I'm gonna have my buddy run the restaurant. He's gonna hire his team, and I'm just gonna, enjoy the fruits of the business. I'll come around, check it out, make some decisions, plan the menu, have some fun with it. Yeah, I'll go in and pay for my meal, just like any other customer, but it'll be mine. I'll own it. That's fine. But if I'm running the show, if I'm the chef, or I'm the maitre d', or I'm the server, or if I'm day to day in that restaurant, cleaning tables, that's a problem because under 4975C, once the IRA owns more than 50%, it becomes a disqualified entity, and then I'm a disqualified person. It's my IRA. I'm not allowed to personally benefit or provide any services that aren't reasonable, necessary, and receive compensation. So that's why I'm kind of asking what your role would be. If it's passive and you're not going to be involved in that business, then I really don't have a problem with it. But just make sure. Also, make sure it's a C Corp, not an S Corp. And you or your lineal descendants, parents, children, spouse, daughter-in-law, son-in-law cannot be actively involved in that enterprise. So, really wonderful question. Thank you for it. Third and final question of today's podcast from James H. of Fort Smith, Arkansas. James wants to know, I want to use the ROBS for a trucking business. Can I use the 401k funds to buy a truck and for truck-related expenses? So it's a great question. What's a ROBS? A rollover business startup solution that allows someone to use their 401k to invest in a C Corp. And even if the C Corp is owned more than 50% by the 401k, because the 401k is buying qualified employer securities, which is stock in the corp, there's an exception to the prohibited transaction rules under 4975D13 that allows a 401k to buy qualified employer securities. So this is actually a great question. I'm happy my producer kind of put this question after the second one, because if you remember, the second question was the facts were the IRA owns 100% of the C Corp. In this question, the 401k is going to own the C Corp more than 50%. The exemption to the prohibited transaction rules under 4975D13 only apply to 401ks buying C Corp stock, not IRAs. Why? Heaven knows. Honestly, I have no idea. But the rules state that the 401k could purchase qualified employer securities, probably because they wanted to give employees that work at companies with a 401k the ability to use their 401k to buy stock in their company. So what ROBS does is basically allow you, James, to be involved in that business actively, where the individual in the previous question was not able to do because it was an IRA buying the corp and not a 401k, and there was no exemption to the prohibited transaction rule. So James, yes, let's do a simple example. Let's say at 100k, you set up a C Corp, set up for you. Say you call it NewCo. NewCo sets up a 401k. We call it NewCo 401k. You roll your $100,000 tax-free into NewCo 401k. NewCo 401k buys the stock in NewCo. Say it owns 95%. You put in some cash. So you own 5%. You're the president. You are an employee. You have to be an employee of the business. You have to take a salary. Why? Because if you're not an employee, you won't be eligible to roll over those funds into the 401k. So you must be an employee, which is a benefit, right? Which is what the individual in the second question would not be able to do. And yes, you can use those funds in the corp, right? The money comes from the 401k down to the corp. In return, the 401k gets stock in the company. And yes, you'd be able to use those funds for any business-related expense, whether it's buying the truck, repairing the truck, marketing, advertising, business-related expenses involving your trucking operation. You would be able, maybe your internet, phone, computer, whatever relates to your business, your website, you would be able to use 401k related or corp related expense cash to fund those expenses. So this is a really good question, again, because it contrasts with the IRA buying the corp, no exemption to the prohibited transaction rules. If you look at a 401k buying the corp, take advantage of 4975 D13. You can do the ROBS, earn a salary, be actively involved, and you could then own the business in the 401k. And if it's a Roth 401k and you sell your stock, in that business, it all goes tax-free back to the 401k. If it's an asset sale, the corporation will have to pay 21% tax on that asset sale, but then all the dividends would flow back to the 401k or Roth 401k tax-free. So really good question. And I've gotten a lot of clients lately. I'm not sure. I know the trucking business is hot. There's a big demand for truckers, and they're getting paid very well. But what I've seen is lately, a number of folks, buying their own trucks through the ROBS and kind of running their own business, and then outsourcing their services to businesses, but being the operator of their rig. And this way, they can control the rig and control the expenses, kind of control their schedule. So, James, thanks for the question, and thanks to the individuals from YouTube that submitted questions. And anyone can do it. I got a great queue of questions. You can send an email to info@IRA Financial and just say add mail or ask Adam, and just jot down your question. I won't use your name. Don't worry. You don't have to be embarrassed. We all can learn from each other. This is a really important podcast because it allows me to learn from you, and hopefully you can learn from me, and we could all get smarter and become better self-directed investors together, which is the name of the game. That's what we're doing, right? Trying to generate as much tax-free wealth as we can for ourselves, for our families. The system's rigged in our favor. It literally is. It's just about educating ourselves in the best way to take advantage of the system so we could generate tax-free or tax-deferred wealth, which is the way to grow your retirement account faster. So thanks for spending some time with me today. Super appreciate it. Definitely leave a comment, leave a question. I love getting comments and questions. I'll do my best to respond as quick as possible. If you don't mind, thumbs up is always appreciated. If you're watching on YouTube, thank you. Don't forget to subscribe. It's a great channel. We drop a bunch of 3 podcasts every week, a bunch of videos and live, tons of great content. So it's free. What are you waiting for? Do it. Subscribe. Otherwise, take care. Have an amazing rest of your day, and I'll see everyone again next Thursday. Take care.